Welcome back, my friends. Thank you so much for tuning in. This is Silver Slayer, so now let's talk silver. 2 days ago, on October 27th, Ted Butler came out and said silver's not only moving to $50, but it's going to go beyond that. And I like this article. By the way, Ted Butler is very bullish on silver. He's from Butler Research, very respected, been in the game for a long time. He knows what he's talking about. I like this because he's not just throwing out a conspiracy, some speculation, some assumption. He's backing it with research. He's applying what's happened before, why or what pushed silver to $50 before, and why that could be the case today, and even more so. So we're going to break down this article. I really hope you stick around through the entire thing because this is going to be a very, very complex and deep video. I'm going to go into a lot of stuff I also think could apply with this. Now remember, it might not be spot price that pushes silver to $50, but just the price you got to pay out of pocket. Spot price is somewhat irrelevant because even if online or digitally it says that silver's $30 an ounce, but you have to pay out of pocket $50, then what is silver's real price? It's becoming more and more detached from spot price. So even more so when we're talking about $50 silver, he probably is meaning spot price, but I could even beg to differ and say that no matter what spot price does, we're going to have to pay $50, $60. So what is the real price if that's what you have to pay for it? So regardless, we have a lot to talk about. It's going to be a great video. I like that he brings in a lot of stuff of like when silver hit $50 in 2011. He even goes back to 1980 when silver hit $50. A lot of this comparison is very, very relevant because there are a lot of similarities, but even more so today, things are very severe, much more severe than what pushed silver to $50 in 2011. And there's some similarities back in 1980 to what happened from the Hunt brothers that pushed silver to $50 in today's times. So this is going to be a very, very good video. I'm really excited to break this down with you all. If you wanted to buy silver, I got you guys. The best place to buy silver, the most beneficial place to buy silver is Miles Franklin. They are the most respected bullion dealer out there. They are still one of the only few authorized dealers with the U.S. Mint. They can fill $50 million orders, which they actually just got another one the other day. Another one. And Andy's going to be able to fill that. All these other companies, they're scrambling, asking everyone else to sell them silver because they're running low. Local coin shops don't have silver anymore. This company is very beneficial because you can build a business relationship with a company that you know who's behind the scenes filling that order. Andy Schechtman will always make it right with you. It's extremely beneficial, and I hope you guys take that opportunity. Remember, let him know Silver Slayer sent you. Now, let's look at this. Twice over the past 42 years, the price of silver has risen to $50 an ounce. Once back in 1980, and again 11 years ago in 2011. Now, obviously, no one would argue that something that occurred twice already is not capable of happening again. On both prior silver price peaks, prices then fell sharply and quickly. And that's because it went into extreme overbought territory. There was no price stability at these higher prices. It went from like $9 to $50 or $4 to $50. But it didn't go, there has to be corrections. Right, and that's why people that say triple-digit silver next year, it could do that, but it would crash and take years to recover. It needs to go from $25 to $30, then back down to $25, and then maybe $38, and then back down to $32 for a while, and then $45, and then $40, and then maybe $49, and then back down to $42. See how it's building price stability over these several months, that it would be slowly kind of going up, gradually going up? That's what needs to happen. There has to be stability. It has to correct. A correction is actually correct. It's funny that the price needs to go down for it to go back up higher. I know that sounds contradicting, but it's right. Past times, it just skyrocketed all the way up, just a straight line upwards. We don't want that. At least if you want the price to stay at these high levels, you don't want that. So anyways, mentions to say, but the next coming move to $50 in silver is much more likely to not only exceed the past two highs, but also remain far higher for far longer than previously. Now, there's something called a resistance level. There's support levels and there's resistance levels. Support level is what the price is trying to stay above. Here, I'll show you guys this. Hold on. Support level is what the price of silver is trying to stay above. So let's look at 3 months. So it's looking like there's a nice support level around $18. This is what it's trying to stay above. Resistance is what it's trying to break through. Now, in 1980 and 2011, silver topped out at $50, right? So there's a very strong resistance level at $50. If it broke through that resistance level, that means it would skyrocket instantly from there, probably going up to $100. Now, like I said, it would be extreme overbought territory, and there would be a huge correction, and a lot of people would probably lose money at that time because it would probably go from 50 to 100 within 4 or 5 months. And then, as everyone's buying silver at $100, there would have to be a collapse afterwards. It needs to even back out. And then it's going to go back down to probably 70 or something, and then all those people are going to sell because those are going to be all new stackers jumping on the silver train, not understanding the market. Regardless, it needs time. And if silver does break above $50, since there's so much resistance over 40-something years, it would skyrocket. So be careful during those times as well. So anyways, in 1980, the price of silver rose from $7 to $50 in little more than a year, driven essentially by the concerted buying both in futures and physical metals, interest associated with the Hunt brothers from Texas, and then fell even more sharply as a result of exchange and regulatory actions to unwind the Hunt's buying. The government actually banned silver. Because the Hunt brothers owned up to 77% of the entire global supply of silver. 3 brothers. They're billionaires. They bought so much silver that they potentially, or some say, owned up to 77%. Now, we don't know what the number is, but they owned most of the silver in the world. And the thing is, they bought that silver on the Comex, as digital, but they turned it into physical delivery. Now, even back in 1980, we still needed silver for technology. We weren't as advanced back then, but we still needed boatloads of silver. The government wasn't going to let 3 people own all the silver, because then where would they get all this silver from? They needed silver back then. So they banned silver on the Comex. Called Silver Rule 7. They literally banned silver. You could not buy silver. You had to sell it, and you had to sell it back to the government, to the feds. That's what collapsed the price back then. And if the government's willing to ban silver on the spot, make up a law, a rule on the spot to stop these guys, then I'm sure that could happen again. What would it look like nowadays? Who knows? But I'm just saying that they weren't going to let these 3 brothers own all that silver, and they did something to make that, they made it happen. It worked. They essentially bankrupted the Hunt brothers, because this story goes much, much, much deeper than just this. It's a very sad story. I've made a documentary on my channel probably a year, maybe 2 years ago. You can go check it out. But regardless, that was the first time silver hit $50. Still the highest price silver's ever been till today. 2011 it was very close, but 1980, what the Hunt brothers did, buying up all the silver and turning it into physical delivery, is what's that pushed silver to the highest price still till this very day. Now, the epic price run did show conclusively that speculative investment buying could drive silver prices sharply higher. In 2011, silver hit nearly $50 again, but this time there wasn't the slightest hint of excessive speculative buying in silver futures, an area I monitor closely. Instead, the price surge was due to the physical buying of silver, mainly by way of silver ETFs, which, by the way, is important to note that investment vehicles that didn't exist in 1980. The sharp price fall starting in May of 2011 was engineered by interest associated with JP Morgan and did succeed in persuading the silver ETF investors who drove prices higher to sell. Now, in 2011, it's a very interesting situation because there are a lot of similarities. Starting in 2008, obviously, credit financial crisis, recession/depression, $1 billion stimulus leads to $50 silver 3 years later. That was a 3-year time frame. Nowadays, look at the similarities. Nowadays, recession/depression, right? Credit financial crisis, $1 trillion stimulus, also a global pandemic, and a silver shortage. So you can see there's similarities back then, except we're throwing trillions of dollars in stimulus now instead of billions, and we have a global situation on our hands. Plus, add on, everything else that's happening nowadays. If that pushed silver to $50 back then what could that push silver today? Of the 2 billion ounces of silver that existed that exist in 1,000 ounce bar form, the form that matters the most to the price, more than 1.1 billion ounces, or 55%, is owned by the world's silver ETFs. Another 300 million held in the Comex warehouses, making the total amount of bullion recorded from around 70% of all silver in the world. Back in 2011, there was less than half that amount in the world's silver ETFs. 1980, investors held no silver in the world ETFs, or in the silver ETFs, since they were only introduced in 2006 and later. The key point here is that there is demonstrably less physical silver available today than in 1980 and 2011, yet at the same time there are many trillions or more investment dollars sloshing around and looking for an investment home. And that's what I was mentioning. Back then in 1980 and 2011, if that pushed the price of silver to $50, then what could that do today, right? It's much more severe. If you want to talk about crazy silver prices, well, we're living in crazy times. Now, I'm not saying silver is going to hit $50 in 3 months, but I'm saying that now more than ever, if silver was going to break record highs, it would be now. One important consideration often overlooked is that the first price run up to $50 in 1980 resulted in a literal avalanche of silver coming to the market in the form of old coins, as well as silver artifacts of every type imaginable, including silverware and serving pieces. Quite literally, hundreds of millions of ounces came to the market in great silver melt of 1980, and after all, silver's price had been essentially fixed at a little more than $1 an ounce for many decades before 1980. And that's pretty much true. It mattered little that discounts of 50% and greater were received for the silver artifacts melted. And by the way, the Hunt brothers got into silver in 1980 because gold was banned. Isn't that crazy to think? Just in 1980, you couldn't buy gold. Gold was banned in 1980. That's why the Hunt brothers chose silver. Plus, silver has other benefits, but one of the reasons was that you couldn't buy gold at that time. I think we're so focused on nowadays, especially if you haven't been stacking since 1980, you just figure gold and silver has always been available to buy, and you never realize the markets have been a lot different, not too long ago, a couple decades ago. So it mattered little that discounts of 50% and greater were received for the silver artifacts melted. The price advance was great enough to provide a windfall for the sellers. In addition, the U.S. government would come to sell the remaining hundreds of millions of silver ounces it still held in 1980 over the next 20 years, either by auctions or in coinage, for the American Silver Eagle program started in 1986. In the silver run-up to $50 in 2011, there was a second wave of melting, but nowhere near as large as the melt in 1980. The striking thing about the Great Melt in 1980, and its minor sequel in 2011, is that once someone sells his or her unwanted silver artifacts, they can't be sold again. The unmistakable conclusion is that the next run to $50 will not bring great supplies of silver to the market because there's not that much left remaining to be melted. And just like that, in 2011, the US government can't dispose of silver since it doesn't own any, a far cry from the 5 billion ounces it held in 1940. That's a very good point. It's not like we can just fix this problem because there is no silver to fix the problem. So yes, we get a pretty penny, but what's the aftermath, right? We can't just pull this stuff out of thin air. All the while, the physical industrial demand for silver from 1980 or 2011 has increased, while since 2011, mine production has been static due to the ongoing price manipulation on the Comex. Remarkably, and owing to silver's great industrial versatility, the former main use of silver in photography almost disappeared due to digital photography, only to be replaced by demand for new uses, such as solar panels, which solar panel production increased 15% this year. Imagine what that percentage would be in 3-4 years. And actually, photography production or the silver used in photography is booming as well again. People are going back to old films, and it's actually pushing the percentage up instead of decreasing over the last couple of years as seen before. Take a look around and try to deny that the modern world isn't becoming more electronic and electrical every day, and that the world's best electrical conductor, silver, won't play a vital and expanding role. You can't. We're advancing so digitally and technologically in this new era. Silver's used for everything, but we don't have enough of it. And that's a fact. That's not a conspiracy, that's not speculation. We don't have enough. So what's going to happen when big industry, big tech realizes this? What's going to happen when everyone realizes it? People could still sweep it under the rug. I covered an article from Slate. It says there's ample supply of silver, and that silver there's no price manipulation either, right? You have to incorporate all this stuff when you're looking at silver's price. If you don't, then you're missing vital pieces to the puzzle. The absolute key to the coming silver price surge to $50 and beyond is the same force in play in 1980 and 2011, namely investment demand. But whereas investment demand suddenly exploded in 1980 and 2011, silver investment demand has been surging for years to this point. Not only growing as prices have remained stagnant, but engendering such a rapid belief in the higher prices to come that any thought of liquidation on lower price seems absurd. There's even a grassroots internet movement that has sprung up over the past less than 2 years that is devoted to promoting buying silver that numbers in the hundreds of thousands. No such movement exists in any other commodity, not even gold. Yes, it's not called Wall Street gold, it's Wall Street silver, right? And the fact is, even though Wall Street silver isn't in the limelight anymore, they're buying just as much as ever. They have like 230,000 members. And they're growing stronger every day. And they're buying physical silver. A lot of people have a misunderstanding of that subreddit, but they are buying silver more than ever. A lot of people thought they just disappeared after the first surge, but that's the exact opposite. Perhaps the biggest difference between the two past runs to $50 silver is the state on ongoing Comex price manipulation orchestrated by large traders classified as commercials, but in reality are mostly banks, which are just speculators masquerading as legitimate hedgers. In fact, the origins of the long-running Comex price manipulation had its roots in the Hunt brothers bust in 1980 and begun in earnest in 1982, 40 years ago. On the second price run up to $50 in 2011, the Comex price manipulators, obviously led by JP Morgan, bent but did not break and succeeded in turning prices sharply lower starting on May 1st, 2011. JP Morgan has a lot to do with price manipulation. Spoofing, and I'm sure it's much deeper and sinister than that. But no matter how many dollars you throw at silver or away from silver trying to manipulate the price cannot stop the inevitable or the fundamentals, which is supply and demand. Low supply, high demand pushes the price up. That's investing 101. That has the biggest pull. You could try to influence the price upwards or downwards with other means, but fundamentals always outshine any other role. And when we're talking about the supply deficit as severe as it is today, especially in the coming 10 years, we'll just use 10 years for this reference, nothing's going to stop it from exploding. The near financial death to JP Morgan and other large short sellers into April 2011 taught the bank a lesson that could only be learned by first-hand experience. It was the unexpected surge to $50 in 2011 that taught JP Morgan of the critical balance between how much physical silver existed in the world and how easily an increase in investment demand would send prices sharply higher. Being the criminal masterminds that I believe JP Morgan to be, and by the way, it's okay, I'm not going to say for sure, but actually yes, because they've gotten caught red-handed. 3 of their employees going to prison, not jail, prison. Another one for racketeering, a lot of other stuff. JP Morgan has been fined almost $1 billion, $900 million, being caught red-handed for manipulating the price of silver. They're backdating decades. This isn't a conspiracy. I don't have to bust out the tinfoil hat because they already got caught, and their 3 employees, which I'm sure it goes much more, much deeper than just 3 employees, they've gotten caught manipulating the price of silver. It's called spoofing. I'm not going to go too deep into it because this video is already pretty lengthy, but basically they place a false buy or sell order on the exchange, cancel the order before it goes through, tricking everyone else on the market, thinking that the volume is of silver's doing something that it's not, and then those other people start investing and start, making their assumptions off of a false exchange to some extent. So anyways, actually he goes into more. Yeah, so being the criminal masterminds that I believe JP Morgan to be, it put this sudden realization into practice by continuing the downward price manipulation with selective and concentrated short sales of Comex futures contracts to keep silver prices as cheap as possibly, but with a criminal genius new twist, namely accumulating as much physical silver and gold as it could while keeping prices artificially depressed. And yeah, JP Morgan did the same thing with Bitcoin. Jamie Dimon, right? Jamie Dimon is the face of JP Morgan CEO. What he did in 2017, maybe 2016 with Bitcoin is exactly or very similar to what they do now. Bitcoin was booming, but JP Morgan wanted to buy Bitcoin for cheaper. So you know what they did? Jamie Dimon came out, all these news reporters and all over the internet saying Bitcoin's a scam, Bitcoin, don't buy it, it's dangerous. And when he came out and did that, it shot the price of Bitcoin down thousands of dollars. But you know what Jamie Dimon did right after that? Bought millions and millions of dollars in Bitcoin. And they got caught because the blockchain stores every transaction publicly. So they can't get away with that. So yes, JP Morgan purposely wanted to get Bitcoin at a cheaper price, so they had Jamie Dimon go on, tell everyone it's a scam to sell their Bitcoin right now, shot the price down thousands of dollars, and then they went and bought it all up. Now, it worked like a charm over the next decade, with the result that JP Morgan and its hidden interests accumulated more than 1 billion ounces of silver, over 30 million ounces of gold, or physical gold, and if anything, I believe my estimates may be rather low. Sure, it cost JP Morgan some regulatory frictional expenses over the years, including $920 million settlement. That's what I was just talking about. But what's hundreds of millions of dollars when the potential payday is in the many tens of billions of dollars? So, this is a very lengthy article. He just keeps going into JP Morgan and the price manipulation. And this is why when that lady said that silver's price was low because of all these silly reasons and didn't even mention price manipulation from JP Morgan and tried to make it seem like we have an ample supply. That's what got me so angry, because that is so wrong to so many degrees. See, this is the reality of why silver can rise. Do you see the difference between an article like this and that article I covered, which I hope most of you saw that article when I covered that lady talking about it that didn't mention any of this stuff, when this is all the biggest stuff that really is going on behind the scenes? That's why this is important. That's why I try to make videos exposing the truth. That's why I covered that video or that article and tried to be as respectable as possible, but still say, hey, that's not what's really going on, folks. So yeah, I'm going to wrap this video up here. Hope you enjoyed the video. Like I said, if you want to buy silver, I got you guys. Andy Schechtman's the CEO. You probably saw him on my channel before. We have a weekly podcast we do on this channel. Great guy. He's one of the only few authorized dealers. You will see the email on the bottom left corner to send an email to info@milesfranklin.com. Let him know Silver Slayer sent you. You can buy any amount of silver. Someone just bought $50 million worth. Any amount. Amounts that nobody else can buy. And moving forwards, as it's getting harder and harder and these sites are running out of everything, it could be extremely beneficial to build a relationship with that company, because that's a direct source instead of just relying on some other site, especially where you have no relationship with. You don't know that person behind the screen. Plus, they barely have anything left. You see all those notify me buttons? That's not normal. Back when I started, the only buttons that said notify me was some very rare coin or a series or a very, very hot coin at that point in time. But it would always come back next shipment. Nowadays, it's everything and everywhere. That's not normal. So anyways, yeah. I'm going to wrap this video up here. Thanks for tuning in. This is Silver Slayer. I'll see you guys soon. Peace.